Now, Vidya, there can be three major categories for investment. 1. Rise in the value of inventories of a firm over a year. The fixed business investment, which is defined as the addition to the machinery, factory buildings, and equipments employed by the firms. The last category of investment is the residential investment, which refers to the addition of housing facilities. Categories for investment may be planned or unplanned. Gross value added of a particular firm identifies gross value of the output produced by the firm minus value of intermediate goods used by the firm, identifies value of sales by the firm plus value of change in inventories minus value of intermediate goods used by the firm. Net value added of the firm identifies gross value added by the firm minus depreciation of the firm. Now we will discuss gross domestic product or GDP. If we sum the gross value added by all the firms taken together in an year, we get a measure of the value of aggregate amount of goods and services produced by the economy in a year. Such an estimate is called gross domestic product, GDP. Domestic means within the country. Thus, GDP is equivalent to sum total of gross value added of all the firms in the economy. Here, we will discuss how expenditure method works. In this method, we add the final expenditures that each firm makes. Final expenditure is that part of expenditure which is undertaken not for intermediate purposes.
No, I don't get this.
Let us take our previous example. Suppose the aggregate value of output of the economy is rupees 200. Final expenditure received by the baker plus rupees 50. Final expenditure received by the farmer is equal to rupees 250 per year.
Okay, Baba.
Now see, an individual firm can make the final expenditure on the following accounts. The final consumption expenditure on the goods and services produced by the firm. We may note that mostly it is the households which undertake consumption expenditure, say C. The final investment expenditure incurred by other firms on the capital goods produced by the firm. Observe that, unlike the expenditure on intermediate goods, which is not included in the calculation of GDP, expenditure on investments is included. The reason is that investment goods remain with the firm, whereas intermediate goods are consumed in the process of production, say I. The expenditure that the government makes on the final goods and services produced by the firm, say we may point out that the final expenditure incurred by the government includes both the consumption and investment expenditure, say G. The export revenues that firm earns by selling its goods and services abroad. This will be denoted by X. The firm may also import some goods, say M, from abroad and thus incur expenditure abroad, and hence the net expenditure that would be taken is X minus M. GDP identical to sum total of all the final expenditure received by all the firms in the economy. In other words, GDP identical to C plus I plus G plus X minus M.
Okay, sir. I understood the concept of GDP, gross domestic product.